Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since last week's volatility and a blockbuster week of economic data, the Australian dollar has found a slightly weaker start and therefore looking probably away from the point of 67, 80, 90 and maybe seeing a pullback towards where the 60-day moving average is, which is around 67 cents. Therefore, anywhere from 67 figure 15 may find some demand. However, if we see a close under there, this would negate the 70-cent call due to the recent break of the 60-day moving average and instead give the view back towards 65.90 figure area. Until we see the break of 67 cents, then the market will probably eventually take the challenge further and clear 67, 80, 90 up towards 68.5. The only problem I'm finding at the moment is that we are slightly overbought and the MACD is somewhat weak. So therefore, may find that 67, 80, 90 could put a bit of a dent if the bears do ambush and send the market lower. But the point to the downside to reaffirm, as I mentioned, to the bear case is a close from New York of 67 cents. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, trades around 101.22, the euro has found a little bit of trouble since rejecting that key topside level around 110.6075. From the rejection, the market is in slightly weaker to the start of this week, and therefore I look towards the region of 109 figure 25 and reassess. But the technicals breaking down and weighing quite heavily should limit any gains to the upside. So therefore, all eyes on that support area. Into the third day, the market is still attempting to try and climb, that is, for dollar yen, and look towards the region, presently, that is, of 135.45. A break above there would give further scope up towards 136.20, 30 and reassess. With any pullback, likely to be shallow, with 134.85 seen as a temporary base. Sterling a little bit weaker ahead of the Super Thursday, but still the market is a bit wary in terms of the fact that the Bank of England may hike rates anywhere from 25 to 50 base points. That would see rates move around 4.5 to 4.75 depending on the rate hike. Along with that, we also got a little bit more economic data, that is the GDP for the first quarter of 2023, and all eyes will be looking also onto the US Consumer Price Index as well. Key events will be most probably put a bit of volatility into the market, so do be on your guard. But as I mentioned, a slight pullback is in play. Let's see how it looks towards that first point at 125.70. I still feel there is potential for a downward move after the recent topside rejection for gold, and if so, looks towards the region of 2012 and little support until 1,994 to 96, where Friday took a stab at. There is still room to even stretch towards the region of 1,978 to 82, with the topside limited around 2,034 to 38. Wrapping up with oil, the gains are progressing further as we see an extension now towards 72.5. I feel the market's still got a little bit more left in it and maybe even see a stretch on towards $74 a barrel, with any pullback to be shallow around 71.5. Well, that's a wrap for the day. Thank you very much for joining me, and as always, look out for the intraday report. And I hope you do enjoy the rest of the day.